Students, hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and basically we are discussing over the topic called types of banks, right? This is the topic we are discussing over, all right? And basically we had completed the 4 parts so far in this topic. The first part which we had completed was the commercial banks. Okay. Second part which we had completed was known as the cooperative banks. Okay. Third part which we had completed was known as the regional rural banks. Alright. And the fourth part which we had completed the known as the payment banks. Alright. So these were the parts which we had completed so far. Okay. So I hope that you have revised them properly so that you could understand the concept better way and effectively. Alright. And the fifth part that we are discussing right now, it's known as the small finance bank. Okay. We had discussed that the small finance banks were established in the year of 2015 by issuing the guidelines for licensing the small finance banks in private sector or in the private sector you can call. Okay, so in the year of 2015, the Reserve Bank of India issued this particular document to enable the existence of the SFBs, and this document brought the SFBs under the strict control of BRA 1949. Okay, and ultimately the RBI became the regulatory authority. Got it? And we had discussed the various provisions regarding the establishment, regulatory framework, regarding the ownership, regarding the licensing process. Got it? But there is one thing which I wanted to tell you in the previous lecture, but I couldn't. So that's why I'm telling you right now. Okay. If we talk about the ownership, okay, and someone asks you what is the difference between the ownership of all the types we had covered so far, it means that commercial banks ownership, okay, cooperative banks ownership, all right, thereafter regional rural banks ownership, and the fourth one was payment banks ownership, and the fifth was our SFBs. Okay, this is the fifth case. Okay, so now the question is, what is the difference between the ownership of these particular banks or items? Okay, how you can say that this particular one is different from the previous one? Is there any criteria? Is there anything? The answer is yes. How? If we talk about the commercial banks, then the commercial banks could be owned by two entities. The first is the government. These banks were known as the public banks. Okay. Second one is the private players, right? And those banks were known as the private banks. That's what we had covered. Okay. Thereafter, the cooperative banks. In the cooperative banks, we had covered that the community which had pooled their money are basically the owners of the cooperative bank. Okay. In case of the regional rural banks, we had the 3 entities. The first one was the central government. Second one was the state government. And third was the sponsored bank. Okay, these were the entities, and if we talk about their shares, then the Central government had 50% share. State government had 15% share. And the sponsored bank had how much share? 35%. Okay. If we talk about the payment banks, then in general, anyone can apply for the payment banks. But the main difference is that no single entity could be owner. Like there could be no single entity can be defined as the owner of the payment banks. Why? Because no one is allowed to hold more than 49% stakes. Or we can say no single entity is allowed to have the 49% of the stakes. Alright? It means that no one could have the absolute control on the payment banks. That's what we had discussed. In case of SFBs, single owner is allowed. Okay? In the case of individual, in the previous lecture, we had discussed this thing. Okay? So this is the ownership structure and the ownership difference we had covered so far. For commercial banks, both the government and the private players could be the owners, known as the public and the private banks. For cooperative banks, community will be the owner. For regional rural banks, the owner will be the three: central government, state government, sponsored bank. Central government will hold 50% shares. State government will hold 15% shares. Sponsored bank will hold 35% shares. For payment banks, no single entity could be the owner. Okay? It means that no one is allowed to hold more than 49% share as a single basis. Alright? But for SFB, single owner is allowed. Got it? So I hope that you had got what I would try to telling you. Alright? Remember this thing. Okay? So now let's move forward. So now we are going to discuss about the services offered by the small finance bank. But let me ask you one thing which I had told you in the previous lecture. If the services offering by the traditional bank and the small finance banks are not so different from each other, then what is the difference between the traditional banks and the small finance bank? Like how you could divide them from each other. What is the basis? Okay. So I had told you that the traditional banks do not have any special kind of customers. Alright. They are dealing with each and everyone, but however, they could prefer whom they should grant the loan or not. Okay. But for the small finance banks, they are specially established to take care of the marginal segment, for the small people and for the small enterprises. Alright. This is the main difference. Alright. So I hope that now I have reminded you all the things except the one thing. Minimum capital requirements. What was the minimum capital requirement for the establishment of the SFB? Come on, tell me. 10 seconds you have. It's 1, it's 2, it's 3, it's 4, it's 5, it's 6, it's 7, it's 8, it's 9, it's 10. Okay, my seconds was little bit faster. Alright, no issue. Rupees 100 crores should be the minimum capital reserve. Alright, and within the 5 years of the commencement of business, what amount should it reach? How much should be the capital? Must be at least rupees 200 crores. Got it? Alright. So now all the things I think we had reminded. Okay. Come to the topic. Services offered. So the first is the saving accounts. SFBs provide saving accounts that offer competitive interest rate and are designed to encourage individuals to save money. Okay. Like we could say, as the traditional banks accept the deposits. Okay. SFBs also accept the deposits. Okay, this is the SFB. This is the traditional bank. All right, but here is one difference. What was the difference? Okay, the difference is traditional bank could be owned by government or public, or private. All right, SFBs are always private. Now you can ask me, how could I say the SFBs are always private? Because if we go by the document issued by the Reserve Bank of India for their favors, then it was guidelines of the licensing process of SFBs in the private sector, right? That was the guidelines which was issued by the Reserve Bank of India in the 2015. All right. Even in the guidelines, the Reserve Bank of India mentioned that they are only allowing it to be established in the private sector, right? That's why the traditional banks could be established by the government or the private players, but the small finance banks must be established by the private players. All right. And because they are established by the private players, so their aim could be the profit. Okay, because it is required for their survival. Even in the concept of the commercial banks and the public or the private banks, I had told you public banks could bear the loss because they are being funded by the government of India. But the private banks, which are funded by the private players, could not sustain the losses, right? That's why similar thing also applicable in the case of the SFBs. They could not sustain the losses. All right. So they try to attract the more and more customers. Now you can say me, I had provided you the answer that the individual, we had the two individuals. First is the 8%. Second one is the 12%. Okay. They both went to the bank, and then I told you that the bank preferred him and bank rejected him. Okay, so you can tell me, you can ask me, not tell, you can ask me, sir, if that person was rejected by the bank, then why the small finance bank should try to attract him? Like he needs some money and he is not getting it from XYZ, then he should directly reach the bank, SFB, right? He should directly reach it. Then it is not so easy. Why? Because the XYZ is not only the one traditional bank. In the traditional banks, there is also a competition, right? So maybe XYZ is offering the loan at 12%, but there might be some another bank which having the sufficient resources to tackle them both at a single time. All right. It means that fellow will also get 8% interest and that fellow will get 12% interest by the same bank known as ABC. All right. That's why the that's why the SFBs required to attract the customers to them, because even in the traditional banks, there is a competition exists amongst them. All right. So maybe some bank is offering the loan at high interest, but to mark the competition, another traditional bank will lower down the interest rate. All right. So that they could attract those customers who got rejected from the first bank in the first chance. All right. And because, as I have told you, the SFBs are privately owned, it means that they are being funded by the private players. So they try to get more and more people or more and more customers. All right. Because if this is the bank, they having only 100 crores. Okay. But if the people is depositing in their bank, so that they will be able to reach 200 crores within the 5 years, which is essential for their continuation. All right. That's why they required people to come to their bank and deposit their money. Okay. And the simple scenario is that offering a more and more interest rate. Okay, if the traditional bank is offering 8% interest rate, okay, then the SFB should try to offer 9% interest rate. Why I'm not taking the interest rate much higher than only 1% I had raised? Why? Because the small finance banks having a little capital in comparison with the traditional banks. All right. As we had already discussed, for the establishment of the traditional banks, 500 crores is required, but for SFBs, only 100 crores is required. All right. So remember this thing. So the competitive interest rate and are designed to encourage individuals to save money. These accounts often come with low or no minimum balance requirements, making them accessible to a wide range of customers, including those with limited financial resources. Okay, as I had told you, many traditional banks who let the customer opening its saving account with them. Okay, what they tried? They tried that the customer should maintain at least rupees 10,000 as a minimum balance at all the time in the saving accounts. Okay, but the individual who is not capable of doing this thing, he or she has to give the fine or charges if the person is not able to meet the rupees 10,000 minimum balance at all time. Okay, this is doing by many traditional banks. Okay, so what the SFBs are try that they often offers their saving accounts with low or no minimum balance requirement. It means that there must be two cases. The first case is the minimum or low, and second will be the zero or frills. There could be two cases. For the first case, suppose if the traditional bank is charging rupees 10,000 as a minimum account balance, so the SFB could ask only submit rupees 5,000. Okay, in such a case, the customer who is not capable to meet up this demand will automatically direct to the SFBs through this. Okay, second scenario is that they may ask to maintain rupees 0. It means that the SFB tells the customer that you can open your account with us and we are not charging any minimum balance account fees from you. Okay, this could also be done. All right, so I hope that you have got it. Now let's move forward. Customers can deposit and withdraw money easily, and their savings earn interest, helping them grow their funds over time. Okay, suppose this is an individual who is having rupees 5,000 as the saving. Okay, so he went to the traditional account in order to earn the interest rate by deposited his money with the bank. The bank said that, sir, we are charging rupees 10,000 and a minimum account balance, and you are having only rupees 5,000, which is a deficit of rupees 5,000 as per the banking policy. So this person will not allow to deposit the money with the traditional bank. Even if he do this kind of thing, he will have to pay the charges for not maintaining 10,000. Okay, in such cases, if the small finance banks offers a zero balance or no frill account, it means that this person could easily deposit his rupees 5,000 with the SFB. Okay, and he could earn the interest. All right. Thereafter, current accounts. Okay, SFBs offer current accounts tailored to the needs of businesses, organizations, and individuals with high transaction volumes. All right, like suppose if this is a trader who wants to use the current account, which is also known as merchant account. Okay, now the question is, what are the benefits of the current accounts? Actually, we will have a detailed discussion over the types of accounts in the upcoming lecture. Till then, just remember, there is No maximum limit of withdrawal. There is overdraft facility. Okay. These are the two main advantages of having the current account. Okay. In the saving accounts, there is a limit. I think right now it's rupees 5,000 in a day. I'm not sure. I'm just telling you. It is about rupees 5,000 a day. It means that a person who is having a saving accounts could borrow only rupees 5,000. Sorry, could withdraw only rupees 5,000 from the account at a one time. But from the current accounts, there is no maximum limit. It means that as much as he wants to withdraw, he could. Okay. Thereafter, the overdraft facility. It means that suppose if it's only having rupees 10,000 in his account, current account, but he required rupees 50,000, then he could withdraw rupees 15,000. Now you can say if it's only having it's only having 10,000, then how he could withdraw 15,000? Because the excess 15,000, excess 5,000 is the overdraft, or you can say it's basically the credit provided to him by the bank and he has to submit it after some time. All right. So the current account facility is also offered to the customers of the SFBs. All right. Thereafter, current accounts typically come with the features such as a checkbook facility, overdraft options, online banking services to facilitate efficient fund management. Okay. Allow businesses to manage their daily financial operations effectively because there is no such kind of upper limit on the daily transactions. Okay. Thereafter, the fixed deposits. Okay. SFBs provide the fixed deposit schemes that allowed customers to invest a surplus fund for a specific period, earning a predetermined interest rate. Okay. It means that suppose this is Mr. X. He had rupees 10,000. Okay. He wants to submit it on the saving accounts. In such a scenario, he has two conditions. The first, not need money to be withdrawn in a short time. It is the first condition. Second condition is that want to earn more interest. These are the two conditions with him right now. First is not need to withdraw the money in a short period. Second is want to earn more interest. Okay. So in such a cases, he may go with the fixed deposits. Okay. Which having two things. Time period from 7 days to 10 years. And interest is higher to saving accounts. Okay. So this is the fixed deposit. It means that if he opted for a fixed deposit, suppose he submitted the money for 2 years. Okay. Then it means that he could not withdraw the amount from the bank for 2 years. All right. If he does this kind of thing, he will have to pay some charges. All right. Second thing is that the interest received on the fixed deposit is higher than the saving accounts. Okay. Which means suppose if the saving account giving you 8% interest rate, just an example, then the FD or the fixed deposit will give you at least 12% interest rate. Because in the saving accounts, you could withdraw your money anytime. But in the FD, you could not withdraw your money before the time period or the maturity of your time period. If you do this kind of thing, you will have to pay some charges. Okay. So this is the fixed deposit. Okay. Fixed deposit are available with varying tenures. As I have told you, it starts from 7 days to 10 years. It's upon you how much you have opted for. Okay. Giving customers flexibility in choosing the investment duration that suits their financial goal. It means that you could choose a time period between the 7 days to 10 years as per your flexibility, as per your requirements. Okay. Interest rate on fixed deposits are competitive, making them a popular choice for conservative investors. It means this, if the person who wants to deposit the money with the bank do not want money in an immediate succession or to withdraw money immediately, all right, and if he or she wants to earn the interest for the more time period or more interest than the saving accounts, then he or she could invest their money in the fixed deposit. Okay. Thereafter, the micro loans and the small business loans. One of the primary function of the SFBs is to provide micro loans and the small finance loans to micro, small and medium sized enterprises, which is known as the MSMEs, okay, and individuals. About MSMEs, we have a detailed discussion in the upcoming lectures. Till then, just remember, the loans provided to them are known as the micro loans and the small business loan. Okay. For example, if the loan provided to the micro business, then it will be known as the micro loan. If the loan was provided for the small business, it will be known as the small loan. Now you can ask me why the micro loans are known as the micro loan, why the small loans are known as the small loans. Because this will be easier to figure out during the audit and inspection. Okay, suppose this is your report. Okay, this is your serial number, this is your loan, this is your amount. You had give 3 loans. Okay, the first is loan, second is loan, third is loan, fourth is loan, and their value is rupees 10,000, 20,000, 10,000, 30,000. Okay, so if I'm ask you, just tell me how much loan had you granted, you can simply tell me 10,000, 20, 30, 30, 60, 10, 70. Total rupees 70,000 loans has been granted. Okay, but if I'm asking you, can you please tell me how much loan has been granted to the micro and how much loan has been granted to the small businesses? Then how you could tell me? You could simply say by dividing it into the segments: serial number, loan type, amount. 1, 2, 3, 4. The first is the micro loan. Second is the small loan. Third is the micro loan. Fourth is the small loan. Got it? This is 10,000, 20,000, 30,000, 10,000. Total amount is till the 70,000. Okay, but now by seeing the differentiation, you can tell me for micro, we had provided 10, 20, total rupees 30,000 loans. Okay, for small businesses, we had provided 10 and 30, 40,000 loans, rupees 40,000 as a loan. Okay, this is the benefit of being segregation as a micro and the small. Okay, this could be shown to the authorities during the audit and the inspection provisions. All right. So now I hope that you have got an idea about the micro and the small business loan. Now let's move forward. These loans are designed to support businesses expansion, working capital needs, and income generation activities. Okay, like if the person who having the micro business or who having the small business. Okay, so if they having any kind of such business, what will be their motive behind having such kind of business? Means to expand their business, to earn money, okay, to expand the services. For this kind of things, they require the capital, right? And the capital comes from the banks, all right? So this capital is known as the loans, and loans, if provided to the micro, then the micro loan. If provided to the small business, then the small business loan. Okay, so these are basically designed to support the business expansion, working capital, and the income generation activities. Got it? SFBs focus on offering affordable and flexible loan products to the promote economic growth at the grassroots level and empower entrepreneurs, because these are their specific customers. These are their specific customers. Why? Let us take an example. This thing is very much similar to the individual. Suppose this is the XYZ, which is the traditional bank. Okay. Now, two businesses asking for the loan. One is the large business. Second one is a small or micro business. All right. And they both required a loan. But the XYZ having the limited resources. Okay. So XYZ could not cater them both at a single time. All right. So it means that the XYZ has to choose one amongst them. Got it? So the large one is saying that they could opt the loan at 20%. But the small and the micro saying that they could opt the loan only for 13% maximum. Okay. So by this, large business is offering 7% more than the small business. Okay. In such a scenario, what the XYZ will do as a rational business owner, the XYZ will provide the loan to the large enterprises. Okay. And the XYZ will not provide the loan to the small or the micro business enterprise. Got it? So in such a case or in such a picture, here comes the SFBs. All right. SFBs are specially designed for such kind of customers. So the SFB will allow the small business to take the loan from them. Okay. Even the interest rate will be lower than the traditional banks. It will be near about 7 to 8%. Okay. This will help the business to grow a lot, because now not only they get the loan from the bank, but also the interest rate which they had to pay is lower than the previous one. Got it? That's why it is essential that the SFBs fulfill their needs for the micro loans and the small business loans properly. Okay. Thereafter, the priority sector lending. Okay. Priority sector lending is basically those sectors which are regarded as a special sector by the government or the authorities, and it is to be ensured that the person who is taking the loan for these sectors must be given priority. For example, you can say, suppose this is the bank XYZ. All right. XYZ got two person who was asking for the loan and loan. Both are asking for rupees 8 lakhs. Okay. And the XYZ is only having rupees 8 lakhs. Got it? So in case of this, the first person offering 12% interest rate, another person is only offering 8% interest rate. So by the discussion of us till now, you can say it's okay. The XYZ will prefer the 12% interest and will lend the loan to him. In such a case, it is the case of PSL. or the priority sector lending. Okay, as I have told you, the priority sectors are those sectors which are in view of the government or the authorities must be given priority by the banks. Okay, so in such a case, the RBI could direct the XYZ to grant the loan to that person instead of that person. Okay, this is called the PSL or the priority sector lendings. So I hope now you have got a little bit idea about it. Let's try to understand the clear meaning of it. Okay, so the SFBs have priority sector lending obligations as mandated by the Reserve Bank of India. These includes lending to sectors such as agriculture, small businesses, low income groups, and other priority sectors defined by the RBI, which sectors are generally not get preferred by the traditional banks. Why? Because these sectors are not having the capacity to offer the lucrative interest on loans to the banks. Got it? So in such a case, the SFBs are directed by the Reserve Bank of India to take care of such kind of sectors. Okay. By meeting lending targets, SFBs contribute to the development of key sectors crucial for inclusive economic growth and rural development. Okay. For such kind of things, generally, RBI set the targets. Okay. About this, we will have a discussion in this lecture in the upcoming topics. Till then, just I'm trying to give you an overview. All right. RBI generally set the lending targets. Okay. Suppose this is the XYZ. Okay. And they had rupees 60 lakhs to lend out. Okay. After deducting CRR and the SLR. Okay. Remaining amount which they have is to be lent out by them. Okay. Even in this amount, the RBI could instructed them. RBI could instructed them. How? The RBI could say that out of these 60 lakhs, at least 8% you have to give to the PSL. All right. It means that 8% of the 60 lakhs is 4.8. Got it? It means that 4 lakhs 80,000 should be granted as a loan to the people of PSL. All right. If the XYZ is not doing this, it means that the XYZ is violating the provision. In such a case, the RBI could take the action against them. All right. So this is the overview of the PSL targets. Got it? These sectors are crucial for the inclusive economic growth and the rural development. That's why the government, even the RBI, prefers them over the other sectors. Got it? Remittances and the payment services. About remittances, I had told you that these are two types. First is the domestic. Second is the international. Domestics are within the country. And the internationals are the outside the country. Okay. And the second thing, they are always count the inflows. They always count the inflow. It means that the money should be coming inside, not going outside. Okay. Suppose there are two persons. The one person is in America. The second person is in India. Okay. This person is sending the money to him. This is the remittance. Okay. And this person who is sending the money to him It is not remittance. Because the inflow is only in the first case. Okay, so remember this thing. It only includes the inflows. It never includes the outflows. All right. So first is within the country, second is outside the country. Okay. So remittances are basically the payments made by the people who living outside their hometown or even their home country to some other place or some other country. They send their income part to their family. Okay. Like suppose if this is Mr. Abdul, just an example, who is living in Saudi. Mr. Abdul having his family at Mirzapur in India. Okay, nearby the house of Kalin Bhaiya. Okay, Mirzapur, he is having his family. All right, so he is earning rupees, not rupees, Riyal. He is earning Riyal 20,000. Okay, and he is sending 10,000 Riyals to his family living in a Mirzapur. Okay, so there is a what? There is a inflow. Okay, inflow of income from the foreign country to the Indian country. All right, and this is the remittance because it is a part of that person who has earned it while staying outside. Okay, so the small finance banks also facilitates this kind of transactions. It means that SFBs facilitate a wide range of payment services, including the domestic and the international remittances. As I have told you, customer can use SFB services to send and receive money securely and conveniently. It means not only they could receive the money, but also they could send the money outside. Okay, as I've given an example, one person is in America, second person is in India. Okay, so there's not only that the person could send the money to him in India by using SFB. This person could also use the SFB to send the money to the America. All right. In addition to remittances, SFBs offer bill payment services, enabling customer to pay utility bills, taxes, and other expenses directly through banking accounts. And this is why not reminding me about the payment banks. Because the payment banks could also facilitate the remittances and the payment services as we had discussed in Doubts lecture. Okay. Also provide fund transfer services, including National Electronic Fund Transfer and the real-time gross settlements. About NEFT and the RTGS, we will have a detailed discussion in the upcoming lecture. Till then, just revise these things. Okay. Thereafter comes the insurance and the investment products. Some SFBs offer insurance and investment products to cater the diverse financial needs and goals of their customers. Okay. These products may include life insurance, health insurance, mutual funds, and other investment options. Okay. By offering these products, SFBs allowed customers to diversify their financial portfolios, protect their family's financial well-being, and explore investment opportunities. All right, so we can say, however, the SFB is dealing with the marginalized or excluded segment of the population, still offering all the necessary and advanced services of traditional banking. Got it? Got it? So students, in this lecture, basically we have finished some services offered by the you can say small finance banks. Okay, In the next lecture, we will continue with the small finance banks. Till then, revise all the facts and figures we have discussed this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.